Good morning, traders. It is Friday, July 25th. Hopefully everybody had a good night last night. It was pretty wild here. We had a big storm front blow through. Baseball was canceled. It was pretty intense. Massive hail around the province. But last night, all of our furniture got swiped off our dock into the lake. And our Hobie cat spun around. Thankfully, it didn't flip over, which is our sailboat on the beach. But my neighbor's Sea-Doo got picked up and thrown up onto the rocks. It's pretty wild. It's amazing how the bay we're in, Georgian Bay, is very calm, but it turns nasty in a storm in the matter of minutes. And the water comes up and down almost like a rising tide, but it happens in only a couple minutes. The water can surge 3-4 feet and massive waves. But anyway, let's touch on the markets here. What's been unfolding. We've kind of gone from an oversold little dip here on the S&P 500. The bars are green, so the market's been pushing higher. And yesterday we did see the market, we hit a target with our SPY trade. We locked in 12.5%. If we go to the SPY chart, we hit a 12.5% target, locking in some more gains, reducing our market exposure. While everybody else seems to be having FOMO and feel like they're missing out and they want in, and they are getting in at these kind of nosebleed price levels at this point, we're going the opposite directions. We wanted to hit this target so we could actually sell positions. We want to lighten our load, knowing this market is very close to probably a multi-week, multi-month pullback and correction where we don't want to really be holding stocks. And so that's kind of what we hit there. Now with our BAN, this is the ACS strategy. We also hit our 15% target on the QQQ. Now, if we go to our BAN strategy, which is the best asset now, which trades sectors, we had a couple member questions here. We are long SSO with this strategy still. The strategy trades the indices differently. We're up pretty nicely on that position, up about 24%. We're also long QLD. The strategy is long QLD, up about 32% from the entry price. So the index trades there continue to just run with this trend. And these are trend runners. These are trades that we've already locked in partial gains on both of these. And now we let them mature until the trend ends. Eventually, when the trend will roll over, it'll get out at a lower price. But we have seen this in 2020. We saw the QLD trade rally like over 45% before it got us out. So you never know how far the market's going to go. And this is a more aggressive strategy. But we do have a member here wanting to know about the actually, let's go to gold real quick. First member wanted to talk about gold. He was talking about how I see this bullish pattern, this potential launch pad for another big move to the upside in gold. He's wondering why we're not in gold. And reason for that is the strategies, the ACS strategy and the BAN strategy, they are a trading strategy. We don't do discretionary trades. I provide the signals that the strategy gives. Members always, a lot of members will trade our intraday, our morning gaps and overbought, oversold conditions. They will trade the independent discretionary trades and these trade setups that I talk about. We've done Bitcoin trade. I recently shared the one a little while ago, XLY, which has had this bull flag and is running higher. Anyway, long story short, the strategies that we have aren't discretionary. They follow rules, and we don't just get into a trade because there's a trade set up in a different asset class. ACS focuses really just on the stock indices, bonds, the US dollar currency, or cash position. The BAN strategy focuses on sector ETFs. We only take trades when the market generates a trend reversal, a trend signal, and then we move into those trades. But you can trade, anyone can trade these setups and these plays on their own. I do hold gold and silver, physical gold and silver as a long-term position. So I'm in position. I don't really care what gold does. If it goes higher, well, my overall physical will mature and become worth more. If it does correct, and eventually I think we will see a big correction in gold. When a new kind of cycle happens to the upside, we see the market correct, I'll be buying more physical gold for the long-term play. But I'm not looking to get into gold at this point. If we start to break out and run, we may do a discretionary trade. I might jump in. There is good percentage upside for gold. It might be something we jump in. But as I said, we need to wait for it to like start to break out and run. I don't need to front run and say, okay, I'm going to get in here because I think it's going higher. I'd rather start to see it break out and run and see that confirmation and get in while it's screaming higher. This could trade sideways for months. This could roll over and fall. And I really, for a discretionary trade, I like to get in something when it breaks out and then catch that surge, hit the targets and get out versus kind of getting in position early and then waiting and all of that stuff. So that's how we always trade the discretionary trades. We jump in as they're on the run, just as they're breaking out. It's not about trying to beat it before it makes the move and front run the move. It's about seeing the move starting and happening, and we jump on board for that momentum. The other question here, we had a member asking about URA. When did we get into URA? What is the trade? He can't seem to find the trade signals. So there's a couple different plays here. Let me just pull up the members area. Here we go. If you were to go to BAN Trader, you'll notice in the sidebar here there is a search. So you just you can type in URA, whatever symbol it is you're looking for. It will pull up all the updates that we've had for this. So we had this is 23. July, let me see, we have all these different trade alerts going. You can see we had a first trade alert on May 7th. We have another one here, May 23rd, hitting its first target. URA hit its second and third targets reached for URA. So if you go into these, it will show you these updates that we have, and you'll be able to follow along. You can see we hit these trades and these targets. So overall, that's kind of where that is. You just find the alerts there. Obviously, this has had a very big run to the upside. From the entry price, we hit all of our targets. We are out of URA based on the BAN strategy because we hit our targets. Now, it did give a new trigger. We talked about this in the mentoring session. We talked about this in our updates and our videos. It did generate a new buy trigger, generated a new buy trigger right here. And so on our hot list, so the next day at the open is when you get in. It is moving up. If I can get these tools to work here, you can see URA is pushing higher. It's up about 7% from the trigger just a couple days ago. If we look on the hot list, 8 on this trigger day, it says that means 8 days ago there was a buy trigger. It is up 7.39%. When we're in a really strong market condition, we tend to find a lot of these sectors will move 0.5 to 1% a day on average in favor. Not always, but in a strong market condition, that's what they do, and that's what URA has done. So URA had a fresh trigger over here. Now these fresh triggers, once we have a trend reversal over here, these are our initial entries. After we hit our targets, and if there's any triggers after that, those are things that you trade on your own. You manage your own trades there and take those on. They are kind of discretionary bonus trades to continue to get in. I know a lot of members are trading this and actively, benefiting. And I know many have already locked in some partial profits on it because this could reverse very quickly with the markets. And when you're going for these bonus trades in a long trend that's been very overextended to the upside, you definitely need to be a little more defensive. Be happy with locking in smaller, quicker gains and protecting yourself on the balance of the trade, because at any point it can have a very sharp correction and you can give back a huge chunk of profits if you're not don't have stops in place and a game plan. So let's quickly just look at where the markets are this morning. We have seen the markets have some pretty typical price action. We talked about this. We had a gap up. Let me just zoom in here. We had a gap up 2 days ago, which I meant to talk about in that video. I don't think I did. We had a gap up. The market sold off very quickly into that morning gap, filled it. And then since then, it's just been stair-stepping its way higher. Yesterday, we did have the market come right up to our target on the upside for SPY. And if we look at the SPY, you can see here, I'll just zoom into the intraday chart. This is a 10-minute chart. You can see it pretty much came up to our target and really struggled there for the rest of the day. A little bit of elevated volume, but overall we got out right pretty much at the high. The blue line was our target, and so it continues to kind of flounder and trade there at this point. So we have definitely seen a very nice move in the S&P 500 from our entry price. Whoops, wrong button here. Anyway, Right now, we'll just have to let this market figure out what it's going to do. I do feel like we're going to go into some type of market, little bit of a market correction. The VIX and the put-call ratio continue to tell us that there's not a whole lot of fear in this market. People are just buying and chasing price higher. They're buying leverage with options, and usually that is a sign we're getting very close to the end. And we know that both when the SPY hits a 12.5% target from an entry, that is a very significant gain, a very significant point where the market typically runs out of steam and goes into a bigger pullback. The NASDAQ is at 15%. As we know, NASDAQ can move quite a bit more than the S&P 500, but whenever it hits a 15% target, it usually starts to run out of steam and goes into a correction as well. So we have hit everything we've wanted. We've reduced most of our exposure. We're still long the SPY with a small position, and it doesn't matter what the market does now. In a perfect world, we get a nice big fat reset and a pullback. We've locked in our gains. Our accounts for the ACS strategy keep pushing to new all-time highs. And now it's just kind of let this trend reset and give us a new trade setup, because we're more or less heavy in cash right now because we've been scaling out and as we hit these targets. So money's flowing into stocks this morning. It is moving out of bonds a little bit. We are seeing bonds continue to meander and flounder. They kind of popped into an overbought territory three trading sessions ago, and then it sold down and had a big gap down. It's all over the place. Again, bonds not something we really want to focus on. It is in a downtrend, and you can see these overbought territories where usually the market will start to move down. I wouldn't be surprised if we see bonds, have another push lower. This looks like you could argue here this move right through here. This could be an exhaustion island top, meaning you have a big gap up. This is like a gap in price. You have an island of bars floating up there, and then of course you could even say this could be a really ugly head and shoulders formation, and this would unwind and come right back down to where it was over here very easily. So not a huge fan of the bond chart at all. And we've really just avoided it for the past couple of years just because it's in a very strong downtrend, which we can see on the chart here. It just continues to move lower and be kind of trendless. If we take a look over the dollar is having a little bit of a pop this morning, up about 0.4%. And again, it's just constantly under pressure and rotating and flipping and flopping between its trends. And we'll see if it can get some traction. And it's bumped up against the 50-day, sold off, bumped up against it again, and we'll see how this unfolds. But again, the dollar is definitely the most hated. People love gold and silver. Let's actually take a look over at silver. Silver pushed to some multi-year highs. It's pulling back a little bit. Both gold and silver have the potential to keep moving higher. I do like gold more. It's just what I like better. It has a higher win rate. So if you were to do like 100 trades on gold or silver, you'd win a lot more trades with gold. I like winning. There's something about the confidence. You're doing something that you constantly win more than you lose. At gold, you might not make as much percentage-wise in the long run as silver, but believe it or not, you will take a lot more losses with silver, and those losses eat away at your profit. So it's a real tough mix. Gold is that kind of the gold standard. It's the best trade, I think, at this point still going forward. If we take a look over at miners real quick, they have been all over the place. Let's look at GDXJ, which is gold miner juniors. Again, floundering, kind of trading sideways, just like gold, primed and ready for another pop and move. But again, they're really volatile. And if the stock market does run into weakness, like I have talked about, we could see miners really struggle and actually maybe not go anywhere or even potentially move down with the stock market. And gold and silver could continue to go higher because they're going to be a defensive play. Remember the stock market is like the ocean tide. If the tide of the stock market is going down, any stock stuck in it, even if it is a favored sector like gold miners, and could act as a defensive play, it will naturally have selling pressure. Now, it could go up and shoot higher, but you're really going from a 50-50 bet that it'll work out to about a 33% chance that the miners will work out. And I'm not a big fan of that. I'll take a 50-50 anytime over a 33% chance of winning. Even if the upside for gold percentage-wise is less, I want that win. I want the growth. I'm not going for the volatility and trying to make as much as I possibly can. That's just when you chase returns, you generally struggle a lot more. It's just the way it goes. All right, let's take a quick look just at a couple other assets you guys were asking for. Platinum, again, we talked about this running correction, very dangerous. Looks like it might be wanting to break to the downside. I wouldn't touch this with a 10-yard pull. I would just steer clear of it. If you're in it, I'd be looking to lock in profits. It's had a huge run, and I believe the easy money there has been made. Now it's just messing around in a landmine if it'll work out or not. The other one you wanted me to look at was palladium. Same type of thing. It looks like it's starting to crack to the downside. So a little, again, wouldn't touch this thing. If you were in it and you're long, I'd be looking to lock in profits if you haven't locked in some already. And I wouldn't be looking to get back in. Really, just the volatility. If anything, I would wait for a bull flag pattern. If I get these tools to draw. When I record the screen, this e-signal doesn't like to work out. I'd let it build some type of launch pad, and then potentially as it starts to hook up, start to potentially get long as it starts to break out and run. This is what you need for it to take a breather, to rebalance. Right here, you're buying into volatility and to a huge rally or huge sell-off. Again, a coin toss, and not our favorite thing to be involved in. Bitcoin down 2.5% this morning. It's still flagging sideways. It still has a bullish chart pattern across the board. Long-term wise, it's pointing to 136,000 per Bitcoin. Short-term wise, this is still a bull flag pattern. I'm not sure where this short-term pattern goes. This might actually go the same target. Let's just take a quick peek. It goes to about 140 based on this overall pattern. This was an exhaustion low, gap down and rallied up. This here was a spike high. Again, you can always negate those spikes. Brings us back down to about 136, and this giant gap down, you could be more conservative and come down to this low. Again, brings us back to that 36 level. So I usually don't reach for the stars. I'm happy to get out just before you reach the extreme targets, because extreme targets usually, they don't always get hit. I'd rather, again, hit that target, get the win, lock in the profits, be happy, and don't get FOMO about missing out on some extra gains or the market's taking off without you. There will always be more trades. The markets are loaded with trading opportunities. The question is, can you wait and find nice trades and win more than just jumping into stuff because you're on the hunt and you need to trade, which is the biggest enemy. All right, that's about it. We'll call it there. I'm heading up north with my father-son fishing trip. Can't wait. It's pike, walleye, largemouth bass. And then there's another little lake we can hop in and paddle, and it's brook trout and rainbow trout. So super excited for fishing trip. We'll be up there for a little while, and we'll talk to you soon. Bye-bye.